What's going on, YouTube? It's Dave's Daily Trades. We're back and we are ready to cover AMC. So a lot of things that we're going to be discussing today. First, as always, we are going to start off with a technical update, go over the Wyckoff schematic on the micro and macro timescales, and give a little bit of an outlook for how I believe the rest of the week is going to be playing out and how the larger scale picture does look. We're also going to be going over some really interesting things in regards to Citadel Securities. So, of course, the investment from Sequoia investment firms. I probably butchered that name, so apologies. But also looking at some past documentation, which is very interesting. We are also going to take a quick look at the FTD cycle, which certainly looks promising, and also just some updates on the overall economy because this does have a large effect on how AMC plays. And as always, we're going to end the video off with a quick update with unusual whales and how the option flow looks going into the rest of the week. But without further ado, let's roll into that intro and hop into the technical analysis. And we're back. All right. Change of plans, guys. I'm sorry to do this to you all. Going a little off schedule, but I just want to show you how incredibly bullish this options chain is for AMC. So, of course, we're on unusual whales, and look what we have here. These two calls, specifically for the 7/15/2022 expiration, we have a lot of premiums being spent on this. $2.3 million and $1.2 million. We have not seen this type of bullish volume in the options chain for literally months. Now, this is the $1.2 million is for this $29 call. And then we also have a purchased $15 call for $2.3 million. But throughout the afternoon, we actually got a lot of bullish activity. I really liked to see this. Specifically, we saw those $35 puts being sold, and those were for an expiration of 1/19/2024. So that's why I'm really thinking the bottom is in and why I do see upside potential and really just a great finish for January. And specifically, I believe February is going to be a great freaking month. Now, we still do have a little bit of bearish activity we can talk about here. Specifically more on this 35, 30, and even now that one we won't count, but these $30 and $35 puts, we had a 1.3, a 1.8, and also a $663,000 put. Now, this is for 2022, 1/21/2022, so that expiration we all have been eyeing with the absurd amount of open interest. We also have a 1/19/2024 put. That is your 1.8 million. And then the 1.3 million is this 7/15/2022 $30 put. So this is looking freaking fantastic, guys. Now, to the charts. Well, AMC, decent day. Literally closed up 1 penny. I'll take it. It is what it is. A gain is a gain here. And we were up 0.04% for the day. Volume kind of dry, 36,000. But, of course, it was mostly a push for the downside today. So we'll take that. Totally fine. And also kind of off that hammer candle and reversal from yesterday. But let's kind of get down to the nitty-gritty and go over. First, we'll start off with this 5-minute chart here. So a little bit of choppy price action today, but that is totally fine. We did get a good, solid push early on in the morning here. Closed, pushed up, hit our high of the day at 23.75. We did get rejected and then kind of pushed down for a majority of the afternoon period. Did kind of consolidate in this area here, but really good consolidation over here right below this. It was resistance. Now, hopefully, will be support going into tomorrow at that 22.50 area. But what I really want to talk about is the end of the day buying volume. So end of the day, we actually had some great buying pressure, which did push us over this resistance line. And after hours were flat, so we can take that with a grain of salt. But nonetheless, I really like to see that push going into close for a lot of reasons. Even we did have some good buying over here in the middle of the day. And what we have been seeing with AMC is most of our buy side pressure does come in early on in the morning, where we do either have that price up or more of an automatic reaction from a push down early in pre-market. Now, that's totally fine, but seeing middle of the day, a nice green price spike, but also end of the day as well, going into close, that does show that we may have some very bullish activity going into tomorrow. And alternatively speaking, guys, yesterday, phenomenal, because we did come down after that breakout. We touched down here, confirmed the breakout was successful, then started moving on. And today, consolidating was totally fine. I personally really liked how today played out, trading really tight with this support / resistance line we have there at $22.50. Now, let's take a look at we're actually going to hop over here to the 1 hour because this was really interesting. Let me just make sure. No, it was actually the 30-minute chart I wanted to talk about. So, what we have coming on in this 30-minute chart is actually a moving average crossover that we are about to see. This right here, this kind of like teal light blue line right here, that is your 20-day moving average. And it looks like end of day when we had that push up, we're just about to cross over that dark blue line, which is the 50-day moving average. Now, sure, guys, these indicators are lagging, but since we are on that 30-minute chart, it isn't lagging as much. When we do move over to the 1-day scale, yeah, those moving averages are lagging behind quite a few, which is why we were not worried at all about that freaking death cross. So this potentially could bring us a bit of buying pressure tomorrow to the upside with that crossover in effect. We'll certainly keep an eye on that. But all in all, guys, we are really in this consolidated zone over here. And besides for that jump in after hours and then trade down in pre-market, we've been trading in this gap of like, call it like 23.50 and 21.50. So like a $2 price gap for just about a week now. So this consolidation is totally fine. I mean, of course, it's boring. It is what it is. But we're out of that oversold territory that we were hanging in. We're above that $20 level. In my personal opinion, I do believe that bottom is in. I mean, we have a fantastic technical setup here, guys. Look at this, and we'll go over to the 1 hour here. What do we have? Well, we have a double bottom, a massive double bottom at that $20.80 mark. And look at this. Close or open here was at $20.80. And our low here was exactly at $20.80. That is, to the T, perfect double bottom. That almost never happens in the market. And as we know, guys, there's most likely some type of underlying reason of that $20.80 touch point on both occasions. But we'll take it. We'll absolutely take it. Now, a lot of other things going with this as well. I mean, of course, volume low, which we do want to see volume start to increase, especially since we have broken out of this nasty downtrend here, that bull flag. But RSI, like I said earlier, we are out of that oversold territory now and making our way back into that 50 range. And of course, guys, my rule of thumb is anything over 50 is a very bullish push. Below 50, you are still bearish. So I would like to see this continue tomorrow, where we do kind of move up into that 50 territory. And same thing with MACD, we are approaching that neutral level. But on the 1 hour chart here, we did have histograms kind of die down a little bit. But do I think we're going to cross over, have a little bit more downside? Potentially. But I do want to see this really increase with volume and start going into positive territory like we've seen in the past. And just to show you folks that this kind of died out histogram isn't really the biggest concern, because what we had over here was actually a very similar pattern play out. This was on 12/14, and what happened? Well, we did come down, touch that $20 area, come up, trade down, come up, trade down, move up, consolidate, and that consolidation was very close to what we saw today. And as we can see on the MACD here, you did kind of have that flattening of the histograms for a little bit before we start to increase, and then increase again, and then kind of die out on this upper consolidation area between 26 and like 29, $30. So could we get a repeat of exactly what happened here? It is 100% possible. So we'll definitely keep an eye on this. We're really looking for that increased volume. We're really looking for that RSI to push in that 50 range. And of course, this MACD to continue its upward trend and not have a downward crossover. Now, what am I looking at for support and resistance areas? Well, of course, we have recently established this area here at $21.30. We did have that double bottom yesterday play out, so that was really nice. We have been kind of floating around this range here, that 22.50 area, for the past 2-ish, 3-ish days now. So I do want to see us either pick a side. Personally speaking, we don't have a lot of resistance here at that $25.34 mark. I mean, we did have support here, resistance at this area over here, but besides for that, nothing really too crazy. I mean, brief resistance here. So I don't think this area of 25.25 is going to be much of a concern. Really, my biggest target is going to be this $26.80 mark. Because as we can see here, during our selling climax, our sell test, and specifically in this range between, what was this, 1223 and 1229, this was a great area of just pure support before we did break down. So now that we are under this level, it is resistance. So I do believe if we do have that move up, we are going to possibly get rejected. This area here, 2680-ish, come down, retest this support before kind of making that last whack at this downtrend here. So that downtrend has been a little bit of a bitch, not going to lie. We have been rejected several times on this larger scale picture and haven't really been able to successfully break out. But why I think we are on the verge of a breakout here is because of that double bottom, really just confirmation of support levels. And I do believe we are going to start this trend. It's not going to happen tomorrow, but I do believe it is going to be this slow push and grind to the upside here. That's exactly how I would like to play out. But if we do need to reconfirm some support levels, sure, we could get a retest of this 29.30 area. Do I think we would see 21 or 2080 again for a potential triple bottom? I doubt it personally. Anything is possible with AMC, but I highly doubt that because, I mean, we had immense amount of buying pressure over here and really just a very quick reaction after this second touch point at $20.80. So that's why I am mostly bullish going into the rest of the week. I do believe, especially looking at the options chain and just a pure fundamental technical analysis perspective, things do look very good for AMC. So enough with the charts. Things look good. Massive double bottom. Broke out of our bull flag. Let's freaking get it, guys. All right. So really big news today. And I'll link this in the description. I highly, highly urge you to watch this video. Very funny. But nonetheless, Sequoia, whatever the hell their name is investing in Citadel Securities, valuing it at a $22 billion investment. And Sequoia is a Silicon Valley VC firm. They have invested in firms like Apple and various other tech stocks before they were public, and they made some very good plays. But what's going on here, and why is Citadel Securities taking an investment? Well, first of all, this is their first ever investment from a VC firm and just anyone in general. So it comes at a very, I guess you could say, mysterious time. Of course, we know that lots of hedge funds out there have been severely bleeding because of the overall market conditions, and some have actually called it quits, closed down shops, or forcefully have been liquidated in the past. So why are they taking this money? Is it because Sequoia thinks this is a good investment, or is it because they really need the cash right now? Of course, my opinion may be biased, but I believe they are bleeding for cash right now. They really need this cash injection because things are just going bad with their freaking plays. So we'll certainly keep an eye on this, but the reason why I think that is because, listen, They've never, ever taken an outside investment. So why start now? Ask yourself that question. And additionally, shout out Jimmy Lab at Roy_Jenkins. He threw together a great piece, which I will link in the description. I highly urge you guys again to take a quick look at this. But look at this. This is a cease and desist from the SEC to, you know it, Citadel Securities back in 2018. Now, what is this for? Well, Citadel had submitted inaccurate EBS marked shorts as long. So essentially, you take a short position, but you mark it as a long. That is illegal. Altered the average price of an order execution, etc. It goes on and on, guys. The repercussions of a blatant market manipulation, well, it was only a $3.5 million settlement with the SEC, which probably equated to billions, if not more, of profits doing this. So, they've done this once, and I'm not even going to say once. They've done this in the past, and they've gotten caught for it. And they've gotten a very small fine and a slap on the freaking wrist. Now, what makes you all think that they're not doing this again, and this is still going on to this day? And if Citadel Securities can get away with this, with a slap on the wrist and a $3.5 million settlement, when they just got valued at $22 billion, so call it even on the low side, $15 billion is what they're worth back in 2018, and you're going to give them a $3.5 million settlement? That is so fucking bullshit, it's not even funny. But nonetheless, guys, we know what's going on. We're not crazy. They've been caught with this in the past. They continue to do it. And most likely there is many other firms out there doing the same exact thing. And specifically, Gary Gensler came out and said that the market needs to really operate on trust. Well, how can we operate on trust when this type of bullshit is going on in the market? Absolutely sickening. Anyways, sorry for the little rant. Shit just gets me a little pissed off. Now, Vinny Wall Street has been tweeting on Twitter. Of course, he has been tweeting on Twitter. But what he has been talking about is the FTD cycle. So he actually put together very easy to follow articles just resolving around these key dates. So let's jump into this. So he did outline GameStop, BlackBerry. Let's see if we have AMC here. Yep, of course, AMC. So the green is that FTD cycle where it begins. And of course, guys, what we can see is this does typically relate to very nice price increases. So we'll start over here in this time frame this is February-ish time frame. And look at what we get towards the end of this cycle. You have that first green. In the second green, you start to increase. And this was like $5 to just about like $9-ish. We can pull it up on the charts again. But this illustration was just great. So I just wanted to share this with you. The second time frame this happened, look what happened at the end. We start that massive June 2nd run-up. Same thing happened in this time frame. Once you kind of get out of this, boom, you start it. Again here in October. And tomorrow marks the same cycle beginning. So, of course, at the end of this last green bar, that's when that cycle starts, just to confirm, guys. And nonetheless, it's kind of funny because a lot of people are all coming together with these projections. Now, bam, take him as he is. I personally really like the guide. I know he has been wrong with his August predictions, but guys, guess what? Nothing's going to be 100%. We know it's manipulated. It is what it is. He called June, and it was freaking fantastic. So, what he's doing now? Well, he's coming out with some major predictions for 2022. What he's saying is pretty much we should start to see AMC start to move in early January on that 112, which is tomorrow. And he also went on to say in other tweets, he tweeted a lot today actually, that February is going to be a great month. Now, this did get a lot of interactions. It does coincide with what Vinny is saying on these FTD cycles. We do have just a picture-perfect technical setup with that double bottom. And I mean, damn, options flow looks freaking fantastic. Crypto kind of dumping the last couple weeks. I mean, a lot of things are coming together. Now, all I do want to say with this is take it as it is. If this doesn't play out, if the FTD cycle doesn't happen, If we have a little bit more downside, if we consolidate, it is what it is, guys. All at the end of the day, I believe Lou, I saw a tweet about Lou in one of his videos. He was saying we already won the battle, and he is truly so right about that. This game is not about closing out the short positions. It never was. And even a lot of you have been commenting, oh, if we get down to 17 or 18, maybe they'll cover those shorts. No. At this point in time, they can't cover the shorts. There's not enough money to cover these short positions or close out those short positions. It's just not an option, and it was never a part of their game plan. The malpractice that went into this, guys, is more of a let's short this to oblivion until this go bankrupt, and then we make all of our money. Closing shorts was never in the freaking picture. They're not going to close their positions until they are freaking forcefully pushed to close those short positions. Sorry for the pause there. I just had to think for a second. But nonetheless, guys, things are looking freaking great. Alternatively here, what do we have going on with the overall economy? Rate hikes, rate hikes, rate hikes, rate hikes, inflation, 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 inflation. I mean, just about everything going on here. And the Fed, what are they saying over here now? They could easily pull $1.5 trillion of excess liquidity. That's a shit ton of money from the financial system. Then watch market reaction for further balance sheet reductions. So what I got from this is it's looking like a test. Of course, we do know that the quantitative easing is coming, guys. We need that tapering to come because the market is just so over leveraged, and they need to start that cycle of tapering to bring down the fears of inflation, which again may potentially become hyperinflation or stagflation in the near term future. So them pulling out money is more of a test to see how the market is going to operate and how they're really going to take this. I can tell you, and lots of others, I do not believe the market is going to be taking this well. With everything going on with market at all-time highs, this could lead to a pretty wild pullback. Now, the reason because of this is, sure, you're going to pull 1.5 trillion out. Market doesn't really like to see all that money leave, but alternatively speaking, we're expected to see potentially 3, if not 4 or more rate hikes in 2022 as well. Now, this is certainly going to cause some volatility in the market. Of course, it hasn't right now because these are still discussions and talks, and nothing is written down in plain text saying this is 100% going to happen. So once this is kind of planned out and executed, yeah, I think the market's going to take a hit. And this is just Powell. If we have to raise rates more over time, we will. What did I say, guys? Talked about 2024 rate hikes, then it was 2023, then it was maybe the summer of 2022, then it was March. Now it's maybe 2 in 2022, 4 in 2022. Who knows? Maybe we just shoot up for 5 rate hikes in 2022 and go faster, more aggressive. Also, yeah, sure. Pull out 1.5, maybe $3 trillion of money. We'll see how it goes. We're just going to test. It's people's retirement's money and 401ks. You know, it is what it is. Idiots. Anyways, guys, I guess we'll just jump back to unusual whales because I love to see this, man. $2.3 million call and a $1.2 million call. Alternatively, more bullish activity. Things are looking good, and I know we already discussed a lot of things, but I just want to go over today's breakdown. Actually, sorry, we'll go into AMC's levels here. Expirations, still that 114, 121, still getting a little bit of activity today. $23 area was that kind of battle for today, and of course the bears were in control. Look where we closed. 22.79. Yeah, of course they were not going to let us run today. We'll go down here though because I do like to look at larger premiums being paid here. That 7/15 2022. Well, we know specifically why because there was a $1.2 million bet for that expiration. And what do we have for the popular strikes? 35 is starting to get some activity today. Looks like bears are really starting to put some puts around that $30 area. And nonetheless, guys, a lot of smaller calls being put in today. Nothing really to worry about. But on that larger time frame, we do still have a little bit of bearish activity for premiums over 1,500. For premiums over 30,000, still pretty bearish. But guys, this will change in a matter of time once we start getting that upside potential. But when the stock's flat for days and days and days, yeah, we're not going to see those calls printing because you're going to be losing some money. But nonetheless, guys, we're in a great spot. Technical setup is there. A lot of things going for us right now. The FTD cycle, great technical setup, great options activity. I mean, 1.2 millions of dollars being spent on options. Macro events for the economy, not looking hot. So certainly that's going to help AMC, but we'll see how this goes. Take it day by day, folks. But with that said, I'll let you all go. Hope you have a wonderful night. Peace out and tune in for the next one.